The Pakistan cricket loan market, how India's franchise leagues are creating a new geopolitical. The old approach just got more expensive. The practical edge now comes from changing process, timing, and tooling together. We will map trigger, incentive shift, and downstream impact before the close. They granted Shaheen Afridi, arguably the world's most dominant fast bowler right now, a no objection certificate to play in Sri Lanka's Lanka Premier League. But what's actually happening here is Pakistan strategically positioning itself in a franchise cricket ecosystem where it's been locked out of the biggest prize for 18 years. The Indian Premier League is worth $6.2 billion in media rights alone. Pakistani players can't touch it. But they're wanted everywhere else. And that's where the real economics live. Here's the arbitrage: Shaheen Afridi would command between $500,000 and $800,000 per IPL season if he were allowed to play. That's based on comparable player valuations, basically 3 times what he can earn in Pakistan's domestic system. The LPL? It's smaller. Broadcast rights around $20 million compared to the IPL's $6.2 billion. But it's geographically close to India, uses the same cricket infrastructure, and critically, it's not Indian. So Pakistan's government can grant NOCs without the domestic political backlash that would come with direct India participation. The math on this is clean. A top Pakistani player's theoretical IPL value sits at $600,000 to $1.2 million per season. What they actually earn in the LPL, Caribbean Premier League, or Big Bash? $120,000 to $250,000. That's a gap of $350,000 to $950,000 in unrealized value per elite player. Now multiply that across 15 to 20 Pakistani cricketers with international appeal. You're looking at $5 million to $15 million annually in what I'd call talent discount that non-IPL leagues can exploit. For a league like the LPL that's struggling to compete with the IPL's viewership, signing Pakistani stars at 30 to 40% of their theoretical market value is pure strategic arbitrage. They get world-class talent at a discount. Pakistan gets its players paid and on global platforms. Everyone wins except the IPL's monopoly. But here's where it gets interesting geopolitically. The UAE's DP World ILT20, the franchise league that launched in 2023, has already signed multiple Pakistani players. Sri Lanka's LPL is following. What's emerging is what you might call a Gulf South Asia sports corridor. Countries like the UAE and Sri Lanka are positioning themselves as neutral cricket zones. Places where India-Pakistan tensions don't dictate who plays where. This is the same playbook that turned Dubai into the de facto cricket headquarters for Pakistan-India negotiations. It's where the ICC holds meetings. It's where the Pakistan Super League held matches during security crises when they couldn't play at home. Sports neutrality is becoming a tradable commodity. And franchise leagues are the currency. By Q1 2027, watch for Saudi Arabia's rumored franchise league, part of their Vision 2030 sports investment, to aggressively pursue Pakistani stars. I'd expect salary premiums of 20 to 30% over what the LPL is offering. The Gulf states are building sports soft power infrastructure that India can't directly compete with due to political constraints. That's not a weakness for India, it's just a different game. Meanwhile, venture capital in cricket tech is getting a reality check. Over $200 million has flowed into Indian cricket tech startups since 2021. Companies like Dream11, fan engagement apps, NFT projects. These valuations were predicated on the IPL being a monopoly, on it capturing 75% or more of subcontinental cricket attention. But if secondary leagues can capture Pakistani talent and build competitive products, even at 10 to 15% of the IPL scale, it fragments the market. The bear case for pure IPL play suddenly looks real. There's also the Pakistan diaspora angle that nobody's talking about. There are 9 million plus Pakistanis across the UK, UAE, USA, and Canada. Markets where South Asian cricket viewership drives serious ad spend. When Pakistani stars play in the LPL or Caribbean Premier League, broadcasters can charge premium rates to diaspora-targeted advertisers. Think remittance services, South Asian telecom, halal consumer brands. The UK's Asian TV market, channels like Sony Max, Star Gold, pays 40 to 60% higher CPM rates for cricket programming featuring Pakistani players versus generic IPL content. The Pakistan Super League's UK broadcast rights jumped 85% in the 2024 to 2026 cycle. That's not coincidence. Pakistan is productizing its cricket talent for global franchise consumption, not just domestic pride. But there's real risk here. Political volatility is the biggest discount factor. Pakistan's NOC system gives the PCB, and by extension, the government, veto power over player movement. If India-Pakistan tensions escalate over Kashmir or cross-border incidents, NOCs can be revoked mid-season. In March 2025, the PCB briefly suspended NOCs for all private leagues during a pay dispute with domestic players. 8 players were stranded mid-contract in the SA20 league. Leagues now build what they call political force majeure clauses into Pakistani player contracts, effectively creating a 15 to 20% risk premium on those salaries. The first insurance product to offer talent availability insurance for South Asian leagues could tap into a $30 million plus annual premium market. That's the opportunity. So what changes next? By Q3 2026, watch for the LPL to announce broadcast partnerships targeting Middle Eastern and North American Pakistani diaspora markets. If they secure a US streaming deal, even small-scale via Willow TV or ESPN+, it validates the thesis that Pakistan talent is now a global product. By Q2 2027, the ICC's next Future Tours program negotiation could include discussions of bilateral India-Pakistan cricket resumption. And here's the paradox: if that happens, it could actually hurt secondary leagues that have built business models around being the place where Pakistani stars play near India. The LPL's entire valuation is inversely correlated to Indo-Pak cricket normalization. The real takeaway? Shaheen Afridi's NOC isn't about one cricketer playing in Sri Lanka. It's Pakistan strategically monetizing its cricket IP in a fragmented global franchise market where geopolitical barriers create arbitrage opportunities. For institutional investors, the signal is clear. South Asian sports are entering a phase where neutrality has premium pricing power. The countries that can position themselves as cricket Switzerland, the UAE, Sri Lanka, potentially Saudi Arabia, will capture outsized value in what's already a $10 billion plus franchise ecosystem. The real game isn't on the pitch. It's in the NOC approval process and the broadcast rights negotiations that follow.